This conference will now be recorded.
Good evening, everybody. It is Patrick Reed from the Adamas Principle, and we've got a China special. Beat, you're in the house. Hello.
Hi Patrick, how are you doing?
Very well. I'm thinking about the year of the pig. I'm all over the Chinese data. I'm all over the trade talks. I'm all over dollar CNH. Thanks to your good self, because I didn't really look at it before I sort of spoke to you, and obviously Nat Payne, he's another guy that was across that. I had very little experience in EM markets, but so I've got you to thank for that, B.
You're most welcome.
So I've got the dollar CNH chart up. Before we go into all of the kind of mini topics about China, I think it's quite important to realize what dollar CNH, how powerful it is as a barometer, especially with euro dollar and broad dollar strength or weakness. And if you just take a look at this chart, I just want to start the session today. I've just drawn, I mean, this is 3 years. Let's have a look. Yeah, so this is a 3-year chart, and I've just, there are some key levels, and this, you really highlighted a key level for me, which was 7, obviously. That's massive. I put in another key level you mentioned, B, was 6.7. I just think that for me, there's another little level here, which is 6.78. There's a little bit of it's a bit of a messy trend channel there. It's a low here, it's a low way back here, and I just think there's a bit of congestion there, but generally this price action here, you just put it on the 2-year, this, coming down, and then this just looks like it's starting to top out, and all we need now is a break lower. Key things 6.7 double O, sorry, 6.7 triple O. If we close below, if we break and close below it on the weekly, it's bad news for the dollar. But we did get a massive rejection last week, and not only did we get a massive rejection, which is just here, it coincided with a rejection on the dollar index, which is 96.40. Bit of a level for me. I like my moving averages. So this is a nasty price action. It's a key reversal sign for me. And we closed above on the daily. The longer we stay above this, and the longer we stay above this level here, it could have a dollar turnaround. I'm not saying it's certain, but that's my kind of feeling. If we get a couple of good couple of good beats on hard data, that could do it.
The other thing you could do on the dollar CNH chart, if you draw the Fibonacci from the lows from that big dollar rally in mid of last year, you get to 669.50. So 670 I just sort of shaken out of my head, but 669.50, if you draw it from that low to the top, comes out to around 669.50. So 670 is more a sort of my psychological level, and it kind of worked last week. But if you want to be really particular, it's like 669.50 would be the sort of Fibo that the close below would definitely start to open up a little bit more downside, really. And with it, probably a big break in the dollar, like you already alluded to.
Look, that's 38%, mate.
Yeah, exactly.
That's lovely.
That's why it's all adding up, isn't it?
It's all adding up, mate. That's amazing. See, this is why I know you love your fibs. I do love fibs. I don't use enough of them, but I do love them. And just take a look at that. That is from the monster low, 6.2374, all the way up to those highs. Well done on that beat. That's a joy. That
I love my Fibos.
Yeah, it's amazing. Usually with a fib, for those if you're retail, for me, fibs work in all time frames, as you know. I often, if something's rallying or trending and it retraces, you would expect 38% to hold, to continue and sustain the trend, which is higher here, which is higher. If it breaks 38%, normally I would put my stop just below 50%, but I'm not going to do it here because it's going to be very painful. But that's my little rule.
I mean, the nice thing you see the 50s when you look at your price action low there around July. That's really the next sort of level where there's not much in between, right? So it's a big junction for this coming week, very big one.
Yeah, and that's, guess what? I mean, it's played out a charm. We try to, I think we touched slightly below that level, but it's certainly failed to break.
We traded down to like 669 and something before it had a massive bounce,
and then it had a nice, massive, filthy squeeze up there, and there you go. So I guess whoever's stepped in, or it's just some weak shorts or whatever, we've bounced. It is a big level, and that says, if you look here, you could argue, obviously, the 38% has bounced, but when it starts to get to 6.78, you might, if that holds as resistance, then this is playing out as the perfect top. This is total exhaustion. The trend channel here, you've got a previous little bit, you've got a fib there, and you've got it's just looking really tight. Lower highs, lower lows, lower highs, lower lows, and it's sort of like crouching down, and then you probably see another test at this key level here. So that's an interesting place. So
maybe the one thing I like to quickly add, as much as how I love my charts, let's not forget $CNH, there's only one counterparty that matters, and that's the PBOC. So if the PBOC agrees with us, then it can go lower. If they disagree with us, it will not go lower. So let's not get carried away. And I think like what we sort of discussed in this session is really how much of this CNH talk in the trade talks with the US, how much are the Chinese actually willing to surrender, in a sense of what I still don't think they surrender to the point that the US can just say do this or do that. I think I spoke with on my blog I done with investing.com to they might be sort of making comments towards a G20 mantra, which is, yes, we are refraining from competitive devaluation, blah 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 blah, but I just cannot see, there's definitely no level agreed with the US. I mean, just point blank, that's unthinkable. I mean, the US could not demand from another country to say, we're talking about not manipulating the market. So, the US could not ask, put like dollar China at like 650 or something, or God knows what, right? That just doesn't work. So either we support free market or we don't. We spoke off air as well. I read a lot of real China experts in the last few years, and all had one common view, which was that the Chinese renminbi is not as undervalued than the US thinks. And now there's the other problem, which a severe slowdown in China. So the last thing the PBOC really needs is a strong rally in the CNH. That's about the last thing, because then all their RRR cards go out of the window. Because guess what? If they start, the fact is, what many people don't know is the Chinese industry is very closely tied to the FX currency, far more than any other country. So I've spoken to some really strong China experts over the years, and they say, a big figure, two big figures in dollar CNH, one way or another, can actually just straight away lead to company closures tomorrow. That's
Really?
how much they lean on that stability on the CNH. That's how tightly priced everything is. So I just cannot see, the Chinese agreeing to, as I said, lip service, yes. Can anyone control it? No. And I think that is why the talks have been a little bit in deadlock over the weekend, because the US gets frustrated that as much as China says, yeah, we do this, we do that, there's no mechanism in any of these pledges they do, whether it's on intellectual property, whether it's on some of the other stuff, that we can actually have as a measurement of, are the Chinese doing what they promised to do. The only thing where we will see that they live up to their promises is if they buy a few more metric tons of soya beans and some of the other agricultural stuff. The rest, but you know what? Reality is dollar CNH is currently 670 and a half. So there's a bit of downside pressure now already early Asia. Aussie ticking a little bit higher, Euro ticking a little bit higher. So it's definitely the main focus of this week. And dollar CNH will be the absolute key focus that we should have to know where the other dollar is going. And you know what? It doesn't matter how bearish you are in the euro. If you see dollar CNH tank, just don't be short euro dollar. And that is the other worry I have a little bit for this week is, we've been bearish euro and Europe based on the data for quite a while. But in the last sort of week or two, I think everyone is bearish on the euro, for obvious reasons, which I do not disagree. But I start to get a bit nervous that from a positioning point of view, should we get a real dip below the $670 CNH, expand a little bit lower, whether we could have a very nasty accident in the euro on the top side. I mean, I'm not bullish, I'm not going to be long for that, but it's one worry that I have, that actually the market could get caught in the euro, with a nasty, squeeze that is really driven by the dollar move triggered by dollar CNH.
Well, if 6.7 goes, you think 115 will go?
No. What I think is 670 goes, we're going to start to push towards 114. We only just 113.40. So, and we are actually at 670. So that wouldn't be such a, I can't see such a big move to happen. But we suddenly break 114, you get a few stops, you go back up to that sort of 114.20, 40 area. My feeble level is that 114.55 that has been there for like many months. In a way, when we broke down from the highs, the equivalent of 114.55 is 111.88, which we never reached.
That's
now
lovely.
in about 6-7 months. So we could suddenly start to push to 114 and a half, and if dollar CNH were to go to 668, 667, or what is the backside of your channel there? 665-ish or whatever. If we get such a move, then Aussie is going to be above 72.
Yeah, 665.
Yeah, so Aussie is going to be above 72, probably towards 72 and a half again. So don't forget that this correlation, as much as euro dollar is a big, beast to watch with the CNH, let's not forget the Aussie. The Aussie is very directly correlated with an easing, a sudden strengthening of or weakening of the dollar versus CNH will immediately see probably a jump in the Aussie as well, because it's then seen not just as a sort of, they give over to the US, is as well probably see, okay, if the PBOC allows dollar CNH to come lower, as in a higher CNH, means maybe the Chinese economy is kind of through the worst. So you can like draw, because it's, I don't want to use a nasty word, manipulated. Let's call it controlled.
Yeah.
Because we know that the dollar CNH is controlled by the PBOC, and nothing happens in that pair without the acceptance of the PBOC. Means if dollar CNH moves lower, it's doing so with a green light from the PBOC, and that is actually the signal for the rest of the dollars. It's not just whether euro dollar should jump 20 pips because dollar CNH goes down 50 pips. The significance of dollar CNH is because the move happens with the kind of agreement from the central bank. That makes it so big. So it's not just the move, it's the fact that nothing happens in that currency without the PBOC agreeing. So if that comes off, means PBOC is agreeing, that means we're gonna get, if you look at your chart, let's not forget, you could overlay from, if you look the move from April to the highs, that is when we had the big move in the dollar. Let's not forget that. The big move in the DXY happened with that move. So obviously you can now argue, that the contrary could be sort of true.
Yeah, same.
Yeah, what is funny is that we had a very high correlation with euro dollar and dollar CNH when dollar CNH was near 7, and when the PBOC started to be vocal and dollar CNH sold off, the euro jumped. But the rest of the move, if you think about it, and that's where some people that may not kind of totally believe in it say, yeah, but dollar CNH has come off now in the last sort of few 2 months without the euro going up. That is correct. So the correlation is always when the spotlight comes onto it, it's 1-to-1. If the spotlight is off it and we are away from the key levels, the correlation may be 50%, 60%. It's not 100%. But now where the spotlight, we remember the moment the US talked about the CNH being in the trade talks, right? Euro dollar just jumped, dollar CNH sold off, all the dollars sold off, at least for 24 hours. So and given we wait, there's like 3 to 4 days left of the trade talks. So obviously we either get a kick the can down the road, so the deadline gets extended, and then maybe the whole argument slows down a little bit, or there's a deal in the next few days, right? And the deal, suddenly we always thought, okay, we watch stocks. If stocks can't really rally, it's buy rumor, sell the fact, sell risk, and suddenly that CNH came up on the agenda, which just puts it into a completely new sort of light. And it does make me a little bit nervous for next week, because I have bought some dips in dollar Canada, because I just thought it's a nice dip to buy on the back of Bank of Canada. Pollard started to talk a little bit less hawkish during the week. That's maybe another one for our list of central banks that have been hawkish, have hiked rates, haven't really been dovish yet, but Pollard's definitely blinked a little bit last week. Started to talk about data the same as the Fed. So that's really why I bought dollar CAD. But if dollar China tanks, well, that trade won't work. As simple as that.
Yeah, we'll do a special central bank next week. So I just on a sort of slight side note, the coal ban kind of slapped on Australia. We had a comment from Asif from Norbank on my feed, on my feed, but on our show tonight, just to say, is that bad news for GDP, or what extent? And I think you mentioned it, but there was some differing views on the extent of the ban.
Yeah.
But I've been trying to dig around. I couldn't find anything more. But it's not really reacting to this.
No, it reacted in the night when it happened, right? So Aussie dropped after job data, dropped from 72 to about 71.40 on the back of this Westpac RBA rate cut story.
Yeah.
And then at 71.40 to 70.85 was the kind of panic on that coal story. But let's not forget, we just had strong employment data that night. So the market was already a bit called long anyway. and the reaction was definitely too strong. The only additional things I've read is that the coal in questions is a very low quality coal. Yes, obviously it's going to have some impact if it would be banned China-wide. But I think it's not like, you know, the disaster if it were like a really high-end, you know, material that the Chinese are importing a lot. So the coal story we keep on the back burner. We shouldn't just drop it completely, but I don't think it's the make or break for the Aussie. So it was probably just, you know, another mini flash crash where suddenly everyone turned seller and the toys just can't sort of deal with it. That's again another topic for another for another session.
Yeah, it's good.
Which I have very strong opinions about, but anyway.
Yeah. So I just want to that's brilliant. Thanks, Beat. We, you know, we've got obviously the 1st of March, which is big, which is on the Friday. That's where it all comes to a head. And there's a few central bank speakers in the week talking, you know, and I think the market's just going to be all ears on anything China related. So hence the China special. I want to really talk about liquidity and something I picked up from Danske Bank, in that there are lots of things to suggest that the credit splash is starting to affect the Chinese economy. Some of the things on the positive side are iron ore, as you know. That could be a lot of other reasons, but it's high, which is all good for China anyway. Metals higher. The corporate bonds legislation, laws, rules, whatever you want to call them, have been relaxed, and essentially, what the report was saying that is this is starting to creep into the economy. You have a great something to tell to kind of sober this risk-on feeling I got from.
From
the
credit numbers. You mean from the credit numbers, Patrick?
Yes, from the January, from the calendar. Some people will call that a term, but it's the calendar element.
Yes. So the story is that the PBOC hands out, you know, sort of limits to the banks on how much they can lend over the years. And obviously, I don't know the exact detail, but I think it's certain, you know, different banks have different limits, blah, 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 blah. What's important is that obviously the January number means the kind of limits. So the limits are yearly numbers. They're not monthly numbers. So if you imagine that the lending side is drying up towards every time towards end of a year, of a calendar year, guess what happens in January? All the taps are open and there's like this binge lending going on. So you cannot take away, and that surprised me a lot because I read even articles from some economists that praise these sort of lending numbers, and I go like, you know, those are actually the people that should know that the January number is always a little bit, you know, with a sort of pinch of salt. So once, like we talked offline, if you get the February number that looks the same and the March number is probably the earliest you can actually talk about a trend. The January number is always a high number. It's when really everyone goes out and says, okay, the clocks are back to zero, let's get going. And so, you know, there's a lot of stuff in the pipeline back end of the calendar year that rolls into January and then the whole story. So, of course, for me as well, I can't totally argue it isn't there because it is there. But the fact is we cannot analyze whether or not this is just the usual January effect and February slows down, or whether this is really the turn. So we can only really tell that in, you know, once we see the February data. But the one thing I would say is do not just think the whole thing is over just because this January number is higher. This is a seasonal jump on the data rather than the actual truth of what's going on.
Brilliant. That's absolutely fantastic. I just want to sort of add a couple of things that are on my radar, and that is, does the market know this, or will the market just grab that kind of headline? It's got a taste for risk, as you know. Will it just take that, or will it sift through and look at the facts? And like you say, it's cyclical. It's based on the calendar. What I do know is it's significant for risk bears. And if you've got or want a position selling risk, i.e. yen pairs or stocks, then be careful. This kind of thing, just even though it's not right, this kind of thing, the markets can take this a bit more. So it all kind of, the other thing, even if you don't believe that whether China's, it's actually turning or bottoming or whatever, or it is the, as you say, the calendar, the rest in DM, the rest of the central banks are in ease mode. Money markets are in ease and cut mode. You only have to look at Eurodollar futures, OIS. They're all in ease and cut mode, especially with we were talking offline about the recent Bloomberg article. I posted that link on my feed saying that they're changing the maturity date from long end to short end, and essentially it's called Operation Twist. I've heard of this before. I didn't fully look into it, but essentially the bottom line is it's a dovish or potentially could be a very dovish move. It will affect interest rates and money markets. If we get to zero in the States, it will give them more firepower because they can sell the short end, the short papers, and replace them with long end. So this is obviously a dovish move. All of that together with a chorus of central banks being dovish, neutral, PBOC with its triple R cuts and splash of injection here and there, all makes it for risk on, really, in easing financial conditions. I'd be interested to know what the FCI index are pointing, both Chicago and the Goldman's. I'll see if I can hook those out. But even if I am a risk bear, which I kind of am, all of this is just annoying me. All of this is going to be really significant in the size of my position if I'm selling risk and my entry levels. So it must be very difficult, and I don't know why. Yeah, sorry, Beat, you go ahead.
Yeah, no doubt. I mean, this is one of the more difficult years for the last, many years. Obviously we have a politicized market with Brexit. We have a politicized market with this US-China story that's been going on and on and on and on. In the meantime, we had this global slowdown, which obviously led the Fed to start to hit the pause button. So we almost overwhelmed with kind of, things happen very quickly. We quickly talked offline about how fast, for example, the German economy decelerated. How quickly GDP just sort of fallen away. And that is really, I guess, some explanation why the Fed may actually have gone from December all hunky-dory to January. Oh, wait a minute, let's just see what this turns into. So that is really hard. The one thing I would think, but it's very hard to trade at first, is, the Dow is 26,000, right? So we're not that far away from the all-time high. Now, what you will not see, in my opinion, is just because the Fed starts to talk a little bit hawkish or stops hiking rates, suddenly what? Do we get another binge buying up to 30,000 while the economy starts to turn? If we dovish after a big sell-off in equities, or equities are down 10, 15, 20%, and central banks are dovish, cutting rates or whatever, yeah, I do not disagree that we could see, a big rebound. But we're talking about something that is still trading at least what the US is concerned, on, in my opinion, inflated levels. So we cannot just hit the reset button at 26,000 and say, you know what, we now argued like for 5 years, oh, the stock market is so bullish because the economy is so good. And then we press the buy button again and say, like, yeah, the US economy is slowing down or turning down, but let's buy stocks because the Fed is going to be around. So somewhere in there is an accident waiting to happen. And at some point we have to come back to real fundamentals. Real fundamentals mean, yes, the stock market can go up if financial conditions are easing, and if the economy is growing. If the economy isn't growing, and let's not forget, a big part, not a big part, but quite a part of this latest rally that we've seen before we topped out has been all these share buybacks from companies after the tax cuts, right? So this is not mums and pops that loaded the boat. This is just companies that indiscriminately buying their own stock back, even that stock is at silly levels, in my opinion. So I just, as I said, from a pure macro point of view, there's an accident in the making. In the short term, I cannot rule out that this whole whatever it is, optimism that comes from maybe just clutching straws or whatever can lead to another extension of the rally. I don't know. I'm not, the expert whether some people go, oh yeah, everything is okay, let's buy. So you can't just be limit short risk, whether be it short equities or FX. That's why it's so hard to trade. That's why we both struggle like so many other people that, every time you go like, okay, now it's time to sell, then there's another reason why you can't sell. So it's really hard. And even myself, I have very tiny risk off positions. I can't have bigger risk because I cannot disagree that if we have a trade deal on Tuesday, that the market just goes bonkers for another few days. What worries me and what concerns me, that's why I said this is probably once for another discussion, is because the market is so algo driven in the short term. And some of the algos are just looking at point blank stuff, right? It's like when we discussed so fair about the German PMI, right? Manufacturer PMI, horrendous. Right, the euro should have dropped 50, 60, 70 points just on that number. Then the market sees services PMI goes, oh, that was better. Well, guess what? Most of the services in Germany are linked to the manufacturing sector. So really, it's not services like in the UK or in Holland or some of the other countries. So the number was just point blank bad. But because there's no one there using his brain cells, and you just have a few algos thinking, oh, that is better, that is worse, so it's a wash, so we do nothing. So macro has just a longer transmission period, because at the end it's going to work. Like we always say, macro is going to lead a move from A to B eventually. But the new way of how this game works is a lot of algos, less human interaction, less risk takers in FX. Let's face it. Banks don't have as many risk takers as they used to have. We have more button pressers than we have actually risk takers compared to 10 years ago. So we have this dislocation, this mean reversion, this extension of a rally, because no one is there who's going to stand in the way. Like 10 years ago, we had a few hundred blokes in the city go like, yeah, that's wrong, yours. We don't have that anymore. So that means all we discuss is about, we're trying to fine tune, because we're bearish. I think the reasons to be bearish are correct, but we cannot rule out that, the algo chasing leads the market another 1 or 2% higher. And if we short too early, too much, guess what? We're going to get stopped and we're not going to be on this level. So it's really, really hard. And that's a little bit the frustrating side right now on how this unfolds, where every time you have a picture, there's a new news being thrown in. Latest, the dollar CNH, for example. Right? We thought we have figured out the trade deal, and we rallied like for weeks and weeks and weeks. So we get the trade deal, we extend the rally, and then we sell off. Now we have the CNH in story suddenly coming last minute, and we have to rethink everything again just after a few weeks that we kind of thought we have figured it out. And that's just, I don't have an answer other than I trade my levels, I trade my views, I'm a little bit more patient in waiting for the levels. I'm trading a little bit smaller to take into account that I just don't know what the market is doing. And it's very hard to read the market right now. But one thing I just strongly feel is that where equities are, for example, you just cannot suddenly, after 8 hikes and the US economy turning, well, we don't know yet, but by the looks of it, the data gets somewhat weaker. Then just say, yeah, we don't care. Suddenly we don't care about the economy, which has been the main driver or the main, what people said, why they're buying stocks. Oh, look at the US economy, let's buy stocks. And suddenly it doesn't matter. I don't get this. I really don't. But I'm prepared for a silly rally just for the sake of it. So that's why I'm maybe, I'm short risk 25% and I have a lot of room to add. Of course, maybe I'm wrong and the rest of the year risk credit, different story. But so for the time being, I'm not prepared to give up because I think it's right at the end. But we have to be very tactical now in that window. The worst for us would be if the US and China kicks the can down the road. That would be just horrible for us in the market because that means, actually, it would be interesting to see whether the market buys risk or sells risk. Actually, we should be selling risk if that happens rather than buy it, because the reason they expand the deadline is because they're just not there yet.
Yeah, I'm always any can kicking. I always
bullish.
buy. Yeah, it's weird. I've just because I think they don't have to make a decision yet, and that is certainty.
Yeah,
that's why I've been buying risk.
To be honest, Sterling just rallied up to 130.70, and all this talk that there's actually 2 talks going on. That Theresa doesn't bring any vote, so she delays as long as she can. The EU, I read a story just an hour ago, talked about they could delay Brexit by 21 months. Get me out of here.
Yeah.
So,
oh my God, you can't make it up.
No, you can't. So
just,
try
and get on that cable rally.
Yeah. So the problem is we have a euro that is kind of should go lower because of really, the European data coming in weaker and weaker. But just as that happens, we have US data coming weaker. We have ECB going down, so the Fed has gone on a pause. So every time something starts to open up, it gets closed from the other side.
Yeah.
And so that leaves us. That's why maybe dollar CNH is the only way out. Maybe you have to bite the bullet. Dollar CNH goes down and the dollar goes down, and then we have some brilliant sell levels for the euro. Going March, April, and May for the European Parliament election. But I don't. I mean, as I said, I bought some dollar Canada on Friday around 130, 140, just because I was kind of waiting for this dollar dipping, dollar cat. I didn't sell any Aussie into the rally. What do you have there? 130, 115. Yeah, that's the second layer where I'm gonna buy some into that channel, just trying to fade. What is that low there? Just that last touching point on the line. What's that? 130, 70, 80 or something?
What, this one?
No, the last one, the last touch. Further to the right, almost at the end. Now further down, just down at the trend line.
Oh, sorry, mate. This one?
No, the last one to the right, 2019. Right, the last. Where your arrow is. Where your arrow is.
What, further, this one?
The next one? No, the next one. That one.
130.60.
Okay. So basically you buy that channel with a stop below 130.50. Okay, perfect. Yeah, so I'm short a bit of Canada yen, I'm short a bit of dollar cat, I'm short some euro yen, short some euro stop here. That's about it really. I haven't participated in the Aussie. Well, I actually missed it in the night of the data.
Yeah, that was
I was a bit cute there. I saw it. I was up for the number. Trades up to like 72.05, and I got a yeah, easy peasy. put a 72.20 sell order in, no problem. Wake up, it's 71.20. Well,
I like the 73.30. I want it to get up to there so I can sell some.
yeah. To be honest, when it gets up there now, something might have changed.
Yeah, I know. Well, look, I think that's it for today. If there's, you know, that we spoke about a lot, and we really are both across the markets all week, and just keep that risk, watch that risk, just keep it under your radar, keep it on your radar, sorry, because anything can happen in markets. Just be careful. It's very difficult, and I'm going to leave you with a final chart. Right, if you think it's difficult to work out what the dollar's doing, just look at this. I mean, especially these are daily bars, right? These are nasty. Okay, I mean, you had a bit of a trend up here, but this is recent stuff, and look at this. This is nasty. Okay, you can't get your teeth into a dollar move. Not only that, but you've got, let's just take one central bank. You've got the FOMC with many people talking about a Fed cut, and then some other people are talking about being pragmatic and data dependent. So you've got that all mixed in with the chorus of central banks, which are dovish, along with things like China and Trump. So it's all kind of, there's nothing you can hang your hat on. So just be careful, and that's all I'm going to say. Is there any final bottom line stuff you want to say, Beat?
No, to be honest, it's I think we said it most. There's, like we said, there's only dollar CNH to watch the next few days, really, and that's gonna tell us where the dollar is going, at least in the short term. And that's all we can really do right now. Or, we get some news out of the US finally out of the way, but that's going to be the next big really thing to watch, next to obviously all the, Brexit tralala. But the rest, it's really, that's going to be the focus. And no matter, including myself, if I see dollar CNH tank, I might have to close some of my risk position, just, to see what's happening. But the last thing I would say is, always remember, if you watch a daily chart, we need daily closes. So if 670 breaks, don't just go like press the button and go mental. You can always have another quick dip and then a sharp rally thereafter. So really, yes, you can sell the break. Obviously you might not trade dollar CNH, but if you trade on the back of dollar CNH and buy euro dollar when it breaks, if dollar CNH re-breaks 670, you have to be disciplined to close the other risk as well. So you can't sell the break and then not, appreciate when it actually comes back and doesn't close below. Only once we actually close below do we actually have a signal. Because people sometimes forget when they watch, daily lines intraday, that actually needs a daily close. That's the last word of wisdom for today.
Well, thank you, Pete. That's brilliant. Yeah, before we go, just I just want to mention Beat does an amazing commentary, and it's made me money. It's prevented me from hemorrhaging money, and it's clued me up. It's sharpened me up, and hopefully, I know hopefully it will sharpen you up. So, without further ado, Beat, would you like to say a bit more?
Yeah, thanks very much, Patrick, for that. Yeah, so what I do is I do the 4-hourly daily charts every morning, write a little research piece on it, trade IDs, etc., etc. Theme of the day, theme of the week. And the 4-hourlies are more the sort of for the day traders. The daily charts are more for the bigger picture macro stuff. And then I sort of write my 2 cents piece during the day, which is just kind of building a puzzle about what's going on out there. And more often than not, I actually at least have little bit of success by, you know, calling what's sort of going on out there. And I think, like you said, Patrick, you know, most people that did sort of that have the product, they actually use it to make money, you know, or at least, as you said as well, sometimes it helps you not to be involved when we shouldn't be involved. And so whoever wants have a sort of 1 week free trial, ping me directly or ping Patrick. Happy to put you on the list for a week.
There you go, free trial. You can't say fairer than that. Absolutely amazing. Please leave comments on my feeds. Just, I hope it's been valuable. We've certainly loved, you know, Beat and I always talk about markets, and you know, we had a nice like from the Bank of England, Chris Mills. Thank you if you're watching, Chris. I'll be in touch when I'm back in London on the 11th of March. We can talk about markets all day long. There is a reason I'm single, and I need to get out a bit more. But there you go. Maybe one day. Maybe one day. Thank you very much, B.
Thanks very much for having me. Have a lovely evening. Good luck.
Take care.
You too.
Cheers.